Okay. So one thing you should be able to know is in taxes, so we have income tax. So income tax includes, sorry, a minute. Income tax include business income, we have employment income, we have rent income, dividends and interests, pension income, income from a digital marketplace, natural resource income, among others. So the ones listed there, we are also supposed to know how we are supposed to file them via iTax. So that is the income under, that is the examples of incomes that are under the income tax. Then the second one should be, sorry, the second one is corporate tax. So corporate tax is the one that we are going to cover today. So that is another type of tax that exists in Kenya. Then another one is we have payee. So payee is pay as you earn. It is both done individually, that is for employed people. Then remember, a company is also supposed to submit your payee. As an individual, you are supposed to file the annual filing returns for payee. So that one I think we have done. We have not done for the company. So as we go on, you just mark what we have covered and what we have not covered. Then we have another one is withholding tax. If you remember, we have done withholding tax for consultants fee. So we have not done withholding tax for dividends. We have not done interest. We have not done loyalties, commissions, pensions, rent received by residents, and other payments specified. So we have not done that. So what we have covered is just that is a management or professional fee. That is including consultants, agency, and the contractual fees. So remember that the others we have not done and we are supposed to cover. Then another one is we have got advanced tax and installment tax. So we are also supposed to cover that one fully and see the functionality in the iTax. Then another one we are supposed to cover is rental income tax. Rental income tax, we have covered the monthly, that is the monthly rental income for residential income, rental income. We have not done for non-residential income, which attracts what we call VAT. That's withholding tax, VAT. That one we are going to cover. Then another one we are supposed to cover is value added tax, that is VAT. VAT, we have said it's done in the non-residential. Then we have VAT on the goods, the goods that are sold, that is by large companies, by partnerships. So we are also supposed to see how the functionality is in the iTax. Then we have another one called excise duty. Excise duty, it's imposed on goods manufactured. So that one, we are also supposed to see how it is filed through iTax. Then another one is the agency revenue. That is a stamp duty and a betting, that is all stroke pool tax. So stamp duty is charged on the transfer of properties. For example, that is shares or stock, or also land. When you purchase land, you are supposed to pay what we call stamp duty, and it's supposed to be filed via iTax. So we are going to see that ones. Then I've also told you the betting tax, that is wale watu unasikia wana beti wanawekelea, is also, that's lotteries, gambling. So it's also it is also taxed. So we are also going to see how it is carried on the iTax. Then I think what we have covered so far is we have covered filing of nil returns, that is both individual and the company. So if I can be corrected if we have not covered, we can indicate, for especially for those whom we started the class with. We have also covered the filing of employment individual residence, that is using different P9 formats. We have done original, and we have also done the amended one. Then we have done what we call, we have done that is the monthly rental income for residentials. So, and we have also done withholding tax for consultants fee. So, and today we are going to cover the annual return filing of corporate tax training. Mpaka hapo tuko pamoja?
Charles.
Yes.
Oh, there you've indicated that we covered, is it VAT?
No, I've not.
Slide 13.
I've not indicated that we have covered VAT.
Oh, covered.
So this is what we have covered. We have covered VAT. Oh, sorry. We have not covered VAT. We have not covered pay. We have also we have only covered. Have we covered filing of nil return, or it was another class? Who can remember?
I think nil we did.
We did
but
for
I'm not
individual.
Yeah, we did. Individual, yeah, individual.
Oh, okay. So for individual, you are very much comfortable with it.
Yeah.
Then now, as today, I will just show you how you deal with the nil return for VAT, rental income, and also payee for the company. Okay.
Okay.
Then we are very comfortable filing now employment individual residence, that is using different P9 forms. For now, I think, is there anyone who cannot be able to file the original or the amended one? So if you find any difficulties, you can inbox me, or you can ask. All as we started, I shared all the recording, so we can be able to follow from there. But if you have any difficulties, just raise the question in the WhatsApp group. You will be well answered either by me or the ones who have understood that aspect. Are we together there? Tuko pamoja hadi hapo? Is it network yako iko mbaya? Hello?
Yeah.
Okay. So we can do corporate tax today. Are we together?
Yeah.
Okay. And you have seen what I shared in the WhatsApp group, and that is what we are going to use. So corporate tax is tax on profits of a corporation. The taxes are paid on a company taxable income, which includes revenues minus cost of goods sold. That is what we normally say, the net profits. The net profits. That is, you take all the incomes, you less all the expenses. What you get is the net profit. That is the amount, that is the figure that you are supposed to pay tax on. So the rate of corporate tax for resident companies they are normally taxed at 30%. For the non-resident companies, they are taxed at the rate of 37.5%. Then we can also ask yourself, are the partnership, do they pay corporate tax? No, the answer is no. Partnership, their profit is distributed to individual partners in the ratio of their own ownership. That is now we refer to the partnership deed. So whatever you signed in the partnership deed, that is how you are going to share the profits. So once the profits are shared, the profit then forms part of each individual income from where it is taxed. Then partnership declare their profit through the income tax partnership return. That is IT2P. So, and also as we go on, I wish if somebody can be able to make what we are supposed to cover. So we can write somewhere, you remind me, we cover partnership, filing of partnership. So partnership, the profit you get, if you are employed and you are also in a partnership or somewhere in a business partnership, you take your employment income, you also add the partnership income, then the total income is what you are going to pay tax. So partnerships, as it itself is not supposed to pay income and tax. Then what corporate tax exemptions do newly listed companies enjoy? The range from the rates range from 20 to 27% for a period ranging from 3 to 5 years, depending on the proportion of listed shares. Then we have the first scenario, 20% rate. If 40 of issued share capital is listed, that is for 5 years, for a period of 5 years. Then we have 25% rate if 30 of issued share capital is listed. That is also for the period of 5 years. We have also 27% rate if 20 of issued share capital is listed for 3 years. So these are the exemptions that when you form a new company, you enjoy. So if you 40% of your issued shares, if you have 40% of your issued shares, you are taxed at 20% for a period of 5 years. Then if you also issue 30% of your shares, you are taxed at 25% instead of 30 for a period of 5 years. Also, if you have issued 20%, you also enjoy that. You are taxed at 27% for a period of 3 years. Then do self-employed people pay corporate tax? No. Self-employed people and sole proprietorship are not subject to corporation tax. Their profit forms part of their consolidated annual income, which they declare in their individual income tax return. What we saw before, what we were doing the individual one before. Can I claim my company expenses? Yes. When filing your corporation tax return, also referred to income tax company return, you are only allowed to claim expenses that have been wholly and exclusively incurred in the production of your income. Here we mean in the production of that income you are supposed to tax, you minus the expenses you incurred. So you must, that is why we said you take the income, you minus the expenses, you get the net profit. But the expenses should relate only to the production of that income. You can't take the expenses from various places and come and minus. No, the expenses should only relate to the production of that income. Then, what if I incurred losses? Because some of the companies incur losses. A company is allowed to carry forward its losses that will offset against future taxable income. So means if you get a loss, you are not supposed to pay tax at all. Carrying forward of losses is subject to 10-year limit. So you cannot say you are making losses every year. So if KRA normally allows you to call the losses up to a limit of 10 years. So beyond 10 years, you cannot be able, in fact, even if you yourself, you make losses, you are also supposed to close the business. So that's KRA is so, and also KRA is also giving you 10 years limit so that you can do what? You can you can close your business. That is all if you are not making profit. Then, however, losses cannot be transferred to a different entity. So if you have formed a company here and you have a company and you are forming another company somewhere, you cannot transfer that loss. Companies in the mining, oil, and the gas industries are only allowed to carry their losses forward for a period of 3 years from the year of income in which the loss arose. Then EPZ, that is exporting that inaitwanga exporting producing zones. These are the companies that normally produce things that are only for the exports. They are exempt from corporate tax for the first 10 years of operation. So once you establish an EPZ in Kenya, you enjoy tax relief, you enjoy tax holiday for 10 years. That's after 10 years, then you are subject to corporation tax at a rate of 25%. Then non-resident entities are taxed through withholding tax regime. So EPZ, but that are not residents, they are taxed through withholding tax. They don't pay the corporation tax. Then how do I account for investment deductions? So for the investment deductions, maybe you are putting up your business. So there are some deductions that you need to make while you are doing your taxes. For example, buildings, that's including hotels, buildings, plants, and the architecture certificates. So the cost you incurred there, you are supposed to, it is called allowable deductions. So you are not taxed on it. Then we have local authorities, occupation certificates, factory layouts showing the location of machines, other supporting documents to support the expenditure incurred, e.g. supply, invoices, contract, documents. So any cost you incur relating to this, it is not taxable. It is taxable allowable. So then we have plant and machinery. Then supplies, invoices, and if you have the supplies, invoices, and the vouchers that you use to buy the plant and machinery, you support it. So you are not going to pay tax relating to the cost you incurred in the plant and the machinery. Then customers documents where machinery is imported, clearing and forwarding documents to support foreign currency transactions, documents support cost of installation of machines. The note, to make it easier for us to examine the documents, prepare a breakdown of the cost and the relevant supporting documents. So you need to make that one so that there is a place you are supposed to approach to KRA so that they can verify and they see indeed you incurred that cost in relation to building or plant and machinery. Then how do I account for dividends and bonuses? Okay, all these dividends and bonuses are allowable deductions like the same what we have seen above. That is, dividends and bonuses treated as allowable deductions against total taxable income. A society can pay 100% of total income as dividends to business, subject to withholding tax at a rate of 15% treated as qualifying dividends. If a society in dividends, bonuses do not comprise 100% of total taxable income, then the remaining amount subjected to 30% corporate tax. Dividends and the bonuses payable cannot exceed 80% of the society's total income. Then deducting dividends and the bonuses from adjusted income only happens if payment is made in cash or by check to members. Payment is approved as the AGM by the members of primary corporate society. Primary also payments approved by the commissioner of corporate societies. So we are going to understand well in when we are going to do a society, that is a SACCOs. We are also going to file for SACCOs, and we see what we have seen. We have seen there. Then we have, how do I file for corporation tax? Corporation tax is filed online via iTax by filing an income tax company return. So the form is called IT2C form. So in the shortly we are going to see that form on before the 6th month after the end of accounting period. So it is said, so after, for example, if your accounting period is for last year, so you are supposed to file for the following 6th month. So meaning the following 6th month, for example, if your accounting period was ending last year, it is this June. So you are supposed to make sure that you are filed before that yet June. For instance, a company whose accounting period runs from 1st January to December is allowed up to 30th June of the following year to file their income tax return. Filing after 6 months, attracts a penalty. So if you don't file, there is a penalty that you are going to pay, which is very heavy. Then the return covers one fiscal year, which is a period of 12 months, within which the corporation chooses to make its financial statements. So you can choose, but it should be 1 year. You can normally, most of the companies, their accounting period starts from 1st January to 31st December. So after doing that, make sure you file before the following year, that is in the 6th month, that is before 30th of June. Then how do I pay for corporation tax? Number one, you generate a payment slip via iTax and make payment at any KRA appointed banks. If the annual tax liability is projected to exceed 40%, 40,000, then you should pay an installment via iTax. It is called installment tax. So if you see that if you project that your profit is going to be more than 20%,